Hello, traders. It's 8:01 a.m. Chicago time on the 1st of September 2020. Thanks for joining me again and for episode number 1831. Thanks for being here. This morning, I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Please do let me know if the sound's too strong, too weak, or whatever. There's always some sound thing going on. Windows likes to adjust my microphone despite turning off control of it, but it is what it is. In any case, this morning we have yet again a mixed market. We're selling off a little bit right now in the indices, but we do have a mixed market with crude leading the pack this morning at trading at 42.99 in the October WTI, up 37 cents or 0.87%. Gold is higher. This goes hand in hand with the dollar being weaker yet again. The dollar's at 91.89. The euro, in case you haven't seen, has hit $1.20. It seems like the dollar is losing out to the euro, the cable, the yen. So we have the cable, the euro, yen, the bund are all up. Interestingly, the 10-year note is slightly down. The bonds are down 15 ticks this morning, and the Russell is the weakest. The small caps are down 6.4 points or 0.41%. The Dow's down 113 or 0.4%. And the DAX is down 0.31%. DAX seems to be struggling to push higher with the U.S. indices. Again, a higher euro makes those stocks more expensive when you factor in the exchange rate for investors. So that's where we stand this morning. In terms of the calendar today, we really don't have much that is high impact. There have been a lot of releases from the Eurozone, from Germany, Great Britain, the Eurozone in general. The inflation rate came out and it is actually deflationary. The inflation for August year on year came in at negative 0.2%, expecting 0%. And the month on month rate's negative 0.4, expected at negative 0.2. So a lot of pressure there on the central bank and its monetary policy for next week, I believe. Looking ahead, we do get market manufacturing PMI. This could be a mover, expected at 53.6, 53.6, the final for August. And then at 10 o'clock, a half hour after the opening, we get ISM manufacturing. New orders at 57.6 and manufacturing prices at 52.2. We get construction spending at the same time at 0.5. Manufacturing employment at 44, and manufacturing PMI, which is the headline, at 54. Prior is 54.2. And then there's some weird bill auctions, 119-day bill auction. I haven't seen that before, although there is a previous number here. And also a 42-day bill auction. Whatever happened to the regular 30-day and 60-day and so on. 42-day bill auction, both at 11:30 Eastern. Fed's Brainerd at 1 p.m. and an API crude oil stock change at 4:30. So a low tier, mostly low tier. Same thing tomorrow. We have a lot of low tier kind of announcements. On Wednesday, we do get ADP tomorrow, so we'll pay attention to that. That was a mover last month. And that's that. So let's move right into, looks like I closed it. Let's move right into the review segment. I closed the browser for it, so let me just pull that up real quick. Bada bing, bada boom. Here we go. There it is. Okay, so let's look at what was expected yesterday. Yesterday, The expectation, the primary expectation is a test higher. Oops, a test higher was expecting it to push into the 350708 area, find some resistance, and push down. The key target down below on the primary scenario is around 3496, 9596, with an extended push on scenario two. On scenario two, this is 9596 and was looking for scenario one to bounce. On scenario two was looking for 90 right here, 90.91, and then beyond there, value low at 83 before the bounce higher. The first and second scenario were the same. The first scenario was looking for a bounce around 95, which is what we got in the morning. And then the second scenario was expecting it to push even lower and go through the value range. So at first, struggle at value high. So scenario one was looking for a bounce at value high in the 95 area, 96 area. Scenario two was looking for it to push into Friday's value area, the blue on the screen here. The blue is the value area for RTH. And once it does, expected to push to the point of control. That would be the key target. And if it's not able to bounce, then we're looking for value low, which was at 83 for the bounce. Here's what actually happened. By the way, if you're a Convergent member, just note that the new chart definitions are out. You can get them in the member portal if you log in. So here's what it did yesterday. We had a pretty steady open auction in range. It held this low volume node area from Friday, the two distributions, the upper distribution where we closed on a neutral extreme, and then the lower distribution. It held the upper distribution at 98, didn't quite make it to the 95, 96 area down here. Went all the way back and tested the 3507, which was mentioned just before. And then later on, it pushed down into the 90. So it pushed into the prior day's point of control in the 90 area. There's a lot going on in this area. This is an MC, a microcomposite high volume node. And then once it did that, we put in a higher low. This was really, this has become a very common setup or pattern in the S&P. This impulse down, unable to continue. Normally, an impulse down would push, pull, and then push again before it consolidates, moves up, higher low, and then push the other way. A common, 1, 2, 3 ABC pattern type of thing. 1, 2, 3, 4, 5, and all that. I'm not an Elliott wave person, and I don't want to sound like I know about Elliott wave, although I studied it for a brief period. But the market unfolds in this way very often. And then we often see this higher low and then a rotation back to where it came from. And it did that. So we ended up with a push through the IB high, a break of the IB low. So yet again, and the IB was quite tight, 9 points or so. And then, so we get another neutral day before neutral day. That neutral following neutral stat just keeps increasing and increasing and increasing. And I suspect that it'll continue to do so until the market finds its top, rounds off, turns, and pushes lower and reverses this trend. There's quite a bit of back and forth as we continue this stair step up. So we push the IB high again, pull back to mid, and then from there catapult to 35.13 and a quarter, which was a measured move stock zone. Didn't move that one from the prior day. And then it sells off to the mid again. Nice little setup, and it's unable to get through the 3507, and we get the end of month selling. This selling here had quite a bit of volume. This zipper was really occurring in the same, in basically the same couple of minutes. If you look at the clock at the top, it's right at the close. Remember, I'm in Chicago, so 1500 hours is 1600 hours Eastern. That is a cash close, and you see that all of those zippers there, all those pops up and down were occurring within that same minute, right at the within the same second, right at the cash close, and then we finally get 15 hours and 1 second way back here. So a lot of this, there was just a lot of activity, a lot of algo activity on the close here before it finally got relief and started to push up. The delta yesterday was interesting because it was the opposite of Friday. The delta spent most of the session above the zero line. The zero line's 3502.75, 3502.75, and you could see it. The session really didn't spend all that much time above there, yet the delta was positive. It tended to neutralize or come back to zero by the end of the session, but really tough read in my opinion. Overall, this is just, as I said, I believe on Friday maybe, this action reminds me so much of when I got into trading in 1999, 2000, which is just eons ago. And it just seems like no matter what, the market is continuing to be strong. You know, for example, Amazon is up. Amazon, which is a major player, major stock, a relatively mature stock, is up like 85% on the year. Pretty crazy. Apple up, deep double digits. It's really a frenzy, and what this could set us up for. And I'm not predicting when this will happen or anything like that. I love selling days because you get paid quickly, but it just, I remember when the market turned and pushed lower in March, April of 2000, it was incredibly strong, it was incredibly violent, and the movements were very, very fierce. I started to officially trade just before that, February of 2000. What great timing, right? And so um, I'm kind of seeing it has the same kind of feel to it. The current action has the same kind of feel to it where it is we invest. There's a lot of liquidity out there, a lot of liquidity, and it's gotta be put to work somewhere. And the place it's going to be put to work or has been put to work is the Fangman stocks plus Tesla, and there are just some specific issues. These big tech stocks now represent just the major tech stocks combined represent a larger market cap than the entire stock market of Europe. Uh, combine the FTSE, the CAC, the DAX, the Euro stocks, combine them all, and these, handful of stocks or whatever, 15 stocks or so in the US are making up for the entire continent of Europe. It's incredibly frothy. Again, I'm not talking bearish here. I'm not talking down the rally because we're going to trade what the price action shows in front of us. But just be aware that there's quite a bit of froth going on here, and you kind of need to be prepared to respond to that. Yesterday, interestingly, some of the biggest rotations were sell rotations. As you can see here, we trigger off the impulse more on the sell side than we do on the buy side. The buy side had one location really. This rally right here is the only spot where we get this impulse rotation that's worth counting. It seemed like the sell side rotations were more exaggerated. But then again, yesterday was the close of the month, and we expect some balancing, and clearly some selling came in on the close of the month. That carries us into the overnight session. One thing I want to note, I did change my charts especially to Convergent members, our group of traders. I changed the full session to comply with the exchange session, which leaves a gap here between 3:30 Central, 4:30 Eastern, and 5 Eastern. It leaves this gap that is uncharted. This gap is always giving me a kind of a kink in my neck because settlement is based on the trading that occurs in that last minute between 4:59 Eastern and 5 Eastern, but it's not included in my charts because the new profile, full session profile, starts at 5 Central, 6 Eastern, and so we have this area here that's not covered. Before that was included in the new session profile. This is an effort by me to conform with the exchange, but the fact is the pit session is still 9:30 to 4:15. The cash session is still 9:30 to 4. The 4:15 was the last 15-minute bracket. That's always been a pit standard because all trades have to come in within the 15 have to be inputted within the 15 minutes, the following 15 minutes of the bracket. So the original market brackets were 15-minute brackets, and then Stadelmeyer came along and turned them into 30-minute brackets called TPOs. I won't get into that with the market profiling, but I consider that last 15 minutes part of the RTH session because it includes all the trades that went off in the last 15 minutes of the cash session incorporated into the futures. So with that being said, we have this little gap here. I know I'm going to get asked questions about it, and it just is what it is. I'm not going to create a separate profile for it. I'm basically disposing of that, except for the fact that there's a settlement price in here, which is often different than the closing price. Sometimes the market is paying attention to settlement, sometimes the close. I like to keep things as regular as possible or as routine as possible. I think that's very, very important as a trader. And so I stick with the close, the closing print. So here's the overnight session. Good volume, 262,000. Good range on the session, 34.84. Remember, I talked about coming down into this 86 area, which was the value low. 84 represents value low of the prior session. So if I scooch a little bit here, you can see that the value low of this session here, I'll pull up the info box. You can see value low is 83.25 from Friday, and that was really the downside extended target on scenario 2, and we kind of hit that area close to it in the overnight session before we bounced. We had a pretty good bounce. We stayed above mid and VWAP, test a VWAP here that fails, and now we went through, and now we're coming up on the full session mid from below, which happens to be the century figure as well. This is a very difficult and noisy area to trade. Be careful trading in this zone here. We have to see what the market does from here. We have a multi-pronged overnight profile. We have a pretty active price discovery in the overnight session. The delta is positive, and price overall, the overnight inventory has been long for the most part. So I'm expecting this to test up, explore lower before it starts to turn higher. Yesterday's action, the RTH action, moved the point of control higher to new all-time highs. The market clearly building a normal distribution higher, as you can see. So the uptrend on a day-to-day basis is firmly instilled into the market, and to the overnight session last night's value area, the orange, is overlapping the full session value area from yesterday. So you could see that we have migrating values. So you can see the market is pushing value higher and higher. So if you're sitting here being a bear being a bear, the information I'm seeing so far is that you are likely betting against the flow of the waves here. As we all know, it's all been buy, 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 buy. So, we're moving value higher. We keep moving value higher, and that has not stopped. The value from the prior day went like this, and it's still moving higher. And so, to me, it is still how does this inform me as a trader versus sitting here trying to be a macro analyst? I'm not a macro analyst. How does this inform me as a trader? It tells me yet again, still, just like it was yesterday, any selling should have short range targets, and you should be very cautious not to let a short run away to the upside. Okay, this is what this is saying. It's saying that shorts are still against the key flow, and that's where we stand currently. So as I expand the overnight range, we see here that that overall we have a nice MC point of control above us at 3504.50. I expect this to be a magnet. You can see how it has been a magnet all night, and it was the point of control area of yesterday, basically. I expect that this area will continue to be attractive right here, and I expect a lot of turbulence as we come into the morning session today. These are the conclusions based on the narrative that's in front of me. One thing I wanted to go over real quick so we can move on here is the composite. Now, the composite chart is made up of RTH bars. Each one of these bars is a pit session. This is not showing the overnight session, and each one of these boxes, light or dark gray, is a weekly bar chart. And what we have from last week is a bimodal or a multi-distribution profile based on last week, and this creates a very, very interesting setup here that gives us, and by interesting, I'm not talking academically, although I sound like an academic right now, and I hate it. It creates what I believe to be, from a trading perspective, a clear risk-reward kind of setup. When you have a double distribution, it is one of the cleanest R factor trades, or opportunity that defines risk reward. And so, yes, last week we pushed and we left a gap above. So that leaves weak structure below us. This weak structure is often repaired. That is at 3,400. It runs from 96 and a quarter to 3409.50. And straddling this 3,400, this is going to be a key area to test on any rotation lower. But we also have this low volume node at 3460 and 3450 range, and that would be, for any selling, that will be the first key test. And if it does not bounce from this area, if it comes down here, consolidates, and fill this in with a fat profile, then you can expect 3418 on the lower distribution. Very important to note that that's what's going on. Of course, yesterday, higher high, higher low, but it ended up putting in a red bar, which we have not seen for about 7 or 8 sessions. The entire week last week did not have a single day that closed below the open, and we closed below the open today on a neutral day, and it may introduce some weakness. We'll see how that goes. But I thought this was important to note. And by the way, yesterday brought in some good volume, despite the range being quite low. There was a fair amount of volume that came in yesterday versus the prior session. The market may be temporarily or short range teetering to the sell side. Let's take a look at what's expected for today. I'm really running over, but there's quite a bit to cover today, so just bear with me here. Here's what's expected this morning. We are fighting, as I said, against the full session mid. We still have the century figure at 3,500, and we have the 3504.50 MC point of control. And the overnight inventory is long, and the expectation this morning is an open auction that reverts back, that pushes back to the middle of the range and comes back into the MC point of control in yesterday's point of control. I expect it to consolidate, but I expect it to fail to hold those prices, and I'm looking for it to test lower and to migrate down into the 90 again, consolidate there, and then most likely push back up into the end of the session. So I'm looking for a two-sided neutral type of day, a two-sided trade. I'm looking for another double distribution profile with the market holding the upper distribution for now. The secondary scenario is what you would normally expect, is an open auction that pushes down, attempts to push lower, and then impulses back up to 3504.50 and then squeezes back to the overnight point of control of 3508. We spent quite a bit of time up here, and then consolidates into the upper distribution. Also an inside day, potentially a high potential inside day to yesterday, and inside of the overnight session. We have a wide range in the overnight session. If we break the overnight session below or above, if we break above, forget the shorts. If we break below, be careful getting short, because there's still quite a bit of structure underneath and quite a few areas to monitor down below. Good luck today, and I'll catch you tomorrow. Get to work. We're only a couple minutes to the open. Sorry about this being so long. Take care.